So as I explained in the video earlier on, we would be looking for potential shorts on euro dollar. It's actually spoken about since that when we have continuational moves, what you usually see is when you take the low of the day and you're looking for a pullback, let's say in New York, if you measured back 25 pips, usually what you're going to have is you're going to find your strike zone around this area. So for example, here we take the low, we measure 25 pips back. If we're expecting continuational moves, if you get a lock in here, that's realistically where your strike zone is going to be for a further pullback, or sorry, for a continuational move. So the pullback, we don't trade the initial reaction of the news. It just doesn't make sense to do that. But as you can see here, if we look to the right hand side, all I'm simply doing is getting into the trade itself. So we actually have a whole level down here. So we'll just mark these levels up. We can see initial reaction off that, which I'm not too worried about. I would expect an initial reaction off that anyway. 250 level is up here, which we didn't quite reach, but the overall flow is very, very good. We can see that we've come down. Initial reaction off here. We can see London has locked in a potential high for the day. So at this point, I'm not expecting this high to be taken out. I even just saw on Twitter a few minutes ago people going, my God, euro dollars price action is so clean and blah, 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 blah. But you have to imagine now what they do. They got the initial reaction. They've either taken profits if they're smart, or what they've done is they've actually moved their stops to break even to, either this low or here where their initial entry was, or potentially even up here. So I'm basically trading the reaction of tapping them out to look for that initial sell. So that's why we allow the reaction, and then the mature phase, and then the real move. You might remember that in the course content where we spoke about reaction, mature phase, and then the real move. And a lot of us, do this on a day-to-day basis. We see the initial reaction, then we realize that, oh, okay, it's probably safe to move my stops to break even before coming back, getting tapped before a further move down, the real move, the reaction, the mature phase, and the real move. Just 3 different phases within the reaction, just straight after the reaction of any high impact news result. And you'll see this over and over again. And right now they're at the stage of frustration, probably see kind of signs of pulling back, and they might get in and then a further pullback, and then they get out before seeing a move down. But right now, if they didn't take profits, you can imagine the majority of retail space has just been tapped out. And this is how my whole career has been built off designing systems that cause pain to the everyday retail trader. We are retail traders, of course. But what I like to think about is I look at all my experiences, things I've done wrong, things that the average day trader or whatever trade style trader you are, the average trader, what they do on a day-to-day basis that causes them pain and frustration. And I've designed the system around that to make sure that, okay, well, we scout from highs of sessions, highs of days, or lows of sessions and lows of days. Therefore, we're taking out all of this noise in here. That's first frustration. Okay, so everyone's trying to trade this. We're trading their pain point when their stops get taken out, where the major reversals are happening. We then look at major trades. The minute I saw Twitter, once again, going crazy about here, these sell-offs, okay, this massive sell-off, couldn't miss the sell-off. It seemed like every single person was able to catch this sell-off here on EU this morning. It was perfectly clean. They say off this order block, whatever else, okay? The minute I saw that, I knew once we were putting this bottom in place, we were going straight back to where, realistically, where they caught the entry in the first place and they added in their initial, or where they added their stops to break even. Majority of them will probably hold for New York, expecting further pull down. They get tapped out at break even, pain point, then they get in a second time, get tapped out at break even, pain point, I'm in the market, and now I'm looking for that move. And you can even see from this initial reaction here, so on lower time frame, 5-minute chart, this massive bullish candle here, that is a trap. I view that as the trap at the support area, cleaning them out, not at a break even, but then actually second guessing their trade, getting in long as they believe now we're heading up higher. Okay, that happens to people who trade movement. This is what happens when you trade opportunity. Very big difference. Also, just to keep in mind here on euro dollar, if we do reach past this whole level over here, one thing I want you to keep in mind is this wick down here. Potentially we could just see this wick being filled. Euro dollar seems to be rejecting that area once again. So 5-minute perspective, what we can see here, looks like possibly finishing the cycle and now engulfing. Almost. I'd like to see that move down happening now in the next little while. Okay, so we can see we've had that now initial reaction back up here that I was talking about. We had that 1, 2, 3 into this high here. A collapse here on this kind of engulfing bearish candle, pin bar, followed by another momentum candle here. We'll be monitoring this now as it sort of plays out, if we can get a move down lower. Okay, and then coming back into this wick then, just, you know, it didn't really take this wick into consideration. I'm happy to take my profit from here to here and, you know, get off the charts for the day. We're done.